The CI Munro Global Growth Equity Fund Series I returned 5.6% over the June quarter, 7.1% from our equity positions and negative 1.4% from our currency positions. While the MSCI All Country World Total Return Index in Canadian dollars returned 5.8% over the same quarter, 7.1% from equities, but negative 1.3% from currency. Global equity markets had another positive quarter, continuing the rally that we've seen from the COVID lows. Market performance was driven by rapidly rising earnings estimates as participants continue to underestimate the strength of this economic recovery and companies' ability to profit from it. From the fund point of view, the quarter was volatile, but ultimately positive. Our strongest contributions came from high-performance compute leader NVIDIA, from e-commerce winner HelloFresh, and from software megacap Microsoft. Detractors from the quarter mainly included our higher multiple names that suffered in the higher interest rate environment, and these included The Trade Desk, Uber, and Twilio. Looking ahead to the second quarter results season is now upon us, and this should actually be the high point for reopening earnings growth that we see in the market. We think it's noteworthy to mention that long-term interest rates and inflation expectations have actually not breached their pre-COVID highs and have actually now begun to retrace. As we look forward, we think investors will look beyond the reopening and they shift their gaze to who actually can produce earnings growth over the longer term. And this should ultimately benefit our strategy. Our digital areas of interest where growth accelerated due to the COVID-19 pandemic look likely to retain these gains. Be it hybrid workforces or groceries delivered online, we do think these changes are here to stay. And this should drive strong medium-term earnings growth for many of these companies well into the future. Outside of the digital areas of interest, we see strong earnings growth from a number of our emerging consumer names that will continue to benefit from the economic reopening. And then finally, we would note that global infrastructure policies look highly directed to help out our climate area of interest. To conclude, we remain generally positive on equity markets. While clearly some tail risks remain, the backdrop of economic growth on the whole broadening and global interest rates likely to remain structurally lower, this actually creates a good environment for companies with the ability to grow over the medium term. And also where equities will clearly be the asset class of choice, should this environment prevail into the future.